Hey, what's going on, guys? Welcome back to Real Estate Playbook. My name's Andrew, and today we're talking about something that's extremely important when it comes to buying a home and getting a mortgage as a whole, right? So get out a notebook, get out a highlighter, get out a pen, because what we're going to discuss in the next couple of minutes is something you need to be aware of if you're going to be making a home purchase. And what we're talking about today is what's called PMI, or private mortgage insurance. And what this is an insurance policy that you are paying to the bank because you are putting less than a 20% down payment on a home. So just like any insurance policy, whether it's car insurance, life insurance, renter's insurance, homeowner's insurance, anything, you're paying insurance to protect somebody. In this situation, you are paying insurance to protect the bank because you're putting a lower down payment. So on conventional financing, guys, you have to pay for PMI if you're going to put less than a 20% down payment. And the main reason for this is because since you're putting a lower down payment, we're going to pay that insurance premium to protect the bank, right? Or they're just showing that you're putting more skin in the game so that in the unfortunate situation that you would foreclose on your home, the bank is being covered. So basically, that's what private mortgage insurance is. It's a very common thing in the mortgage world. Anytime you're going into the low down payment options, and a lot of times our first-time home buyers are running into this just because we may not have 20% to put down on a home. But there's also a whole bunch of different reasons on why you may choose to use PMI, even if you do have a down payment. But we're not going to get into that today. Today, we're going to get into basically what are the main factors that drive private mortgage insurance, right? Because if you're going to pay it, we want to get it as low as possible, right? We don't want to be paying through the roof on an insurance premium when we don't have to. So to help you understand what's going to affect this payment, I wanted to illustrate some different factors that are going to change your monthly payment based off of your private mortgage insurance. So I've got just a quadrant here of 4 different items that are going to play a big role here in this payment. And just for starters here, this is something that can be anywhere from, $80 to several $100s. So this is something that can vary a lot, and you want to be aware of what the drivers are before you ever go, even talk to a bank, because if you understand some of this stuff, you're not going to have the heartbreak or even the frustration of finding out what that payment's going to be before you go to a bank. You'll have a pretty good idea of where you're going to sit here, just in terms of, kind of the damage that will be done, right? So let's just see what we can do here to lower the damage on that monthly payment. And number one here, a huge factor that is going to affect your private mortgage insurance is your debt to income ratio. And I know we went over this together as a team before, but just for review, your debt to income ratio is your total monthly debts. That's what you already have, plus what your future mortgage payment's going to be, divided by the total income you can use for qualifying purposes, right? And you're going to get a percentage, and that percentage, is going to be able to go up to certain maximums depending on the loan program you're using. But right here, as we've kind of just got a direct relationship between DTI and PMI, the higher your DTI is, the higher your PMI is going to be, right? The lower your DTI is, the lower your PMI is going to be. The reason for this is because if you're borrowing, a higher capacity of what you're allowed to borrow, you're going to get hit with, more PMI because you're stretching yourself that much thinner. So say you have a guideline of going to 45% of your DTI. If you're going past 40%, you're at 42, 43, 44% of your total allowable DTI, that's going to increase your premium for your mortgage insurance because you're seen as more of a risk. You're borrowing more of the capacity, right? This would be similar to if you were, maxing out your credit card limit, right? That's kind of what you're doing here. You're maxing out your limit. So the higher you get to that threshold where you have to stay under, that's going to go up. So you can do this kind of math before, you kind of go see a lender. You can figure out, what is my debt to income ratio, just roughly from, your monthly income and your monthly debts. And then you can kind of see where you're at. So we want to keep that as low as possible to avoid a high mortgage insurance payment. Now, another obvious one, but this is something people kind of skip over sometimes, is your credit score. So if you have a high credit score, you're going to have a lower PMI, right? You have a history of being responsible with credit. And that's the same thing we're looking at here with the mortgage, right? You're still borrowing credit. And we're just going off your past history, right? Have you been responsible with it? Yes or no? And if you have been, you're going to get rewarded with a lower payment because you're not seen as a higher risk, right? Because you've been responsible in the past. And just for kind of a benchmark, anything over a 740 is going to put you in a great position. Now, obviously, the higher the better. We want to be in the 800s. We want to be in the upper 700s. But if you're over a 740, that's going to put you in a great situation. Now, if you creep below 700, you're going to see a humongous spike in mortgage insurance. So just know that if you're in the 600s, you're going to want to look at different options and different ways to be creative to structure your mortgage insurance because you are 100% going to, get hit pretty hard there. So those are two factors right there, debt to income ratio and your credit score. Now, another factor that's going to change your mortgage insurance premium is the loan to value you have, right? And just a quick review, your loan to value is your total loan amount divided by the home value, right? And that's going to give you a percentage of how much money you're borrowing from the bank. Now, there's different percentage down payments that are going to put you into different risk categories in terms of the insurance premium perspective. So you can go anywhere between 3 to 5%, 5 to 10%, 10 to 15%, or 15 to 20%. So each little bucket here are going to have different, insurance premiums on your PMI. So if you put, in between 3 and 5, you're going to get hit the hardest. Then as you move higher up the scale and you get closer to 20%, that risk factor gets less and less because you have more skin in the game. You have a larger down payment. So main point there is just to understand there's different categories there. So when you're saving for a down payment and you're playing around with the mortgage calculator, just see what percent would I have? Would I be between a 3 and a 5? Would I be between a 10 and a 5? Or I'm sorry, a 5 and a 10? Would you be between a 10 and 15? Where would you land? Because maybe you land at, 4%. Could you change the purchase price? Could you shop around a little bit so that way you get to over 5%? Because that'll put you in a different risk category, which will then lower your PMI. Same thing here. Maybe you land at 9.5. Can we get somewhere between 10 and 15? So just understand that because the different groups you're in here, these are all different categories that are going to affect your PMI. And then lastly, just your total loan amount, right? Your total loan amount is going to affect your PMI. So the bigger the loan amount, the bigger the monthly payment with PMI. The lower the loan amount, the lower the PMI, just because if you have a larger amount, you're insuring more, just right. That's how the math breaks out here. So these are just four of the main categories that are going to affect your PMI. And guys, I just wanted you to know about this because if you're buying a home and you're not aware of this, you need to be aware of it, right? And paying for PMI is not the end of the world. It's something that a lot of first-time home buyers and just people in general have to, use to get into their home. But I just want you to be aware of the different factors here so you're not blindsided by the different payments that can be. The last thing you want to happen is go to a lender and find out that your mortgage insurance is going to be $500 a month, and then you realize, hey, I no longer qualify for a home. So these are things that you can be working on the whole time as you're planning to buy a home, right? You can be working on your credit score. You can be working on getting your debt to income ratio down. Maybe you're paying off some other debt so that it's not going so high, right? You can use a mortgage calculator to find out, where are you going to be here in terms of down payment percentages. And then obviously, maybe looking at the total loan amount compared to your purchase price and just see where we're going to, add up there to keep that within comfortable amount for us. So I hope this was helpful, guys. I just want to lay this out for you because this is an extremely important thing when it comes to getting a mortgage. And this is something that can save you, several $100 a month, or can cost you several $100. And I want you to be in the saving end. I want you to benefit from this. So this is something you need to know about. So if you have any questions specifically, or if you want to get a mortgage quote, you're just curious, feel free just to reach out to yourrealestateplaybook@gmail.com. And I'm happy to plug in your numbers and just give you some hypotheticals and kind of give you some information on what a projected mortgage insurance payment could look like, just so you kind of have an idea in terms of what that would look like and what you can plan for. So I hope this was valuable, guys. Feel free to leave any comments in the chat or give me feedback here. Thank you so much. Take care.